Good day, Junior Tukkies. I'm Mrs. Brimcombe. We are going to look now at Paper 2, Question 1, Debtors Reconciliation and Age Analysis. When you start the question, make sure that you look at the time allocated for this question and keep within that time. If we look at what has been given to us, Zigzag Traders sells ladies' clothing on credit. Debtors are allowed a credit term of 30 days to settle their account. We are now going to look at each one of these questions individually. Question 1.1. Provide 2 documents that Zigzag Traders will need from potential debtors before they will be allowed to open accounts. Now the question says only provide 2 documents. We are going to look at more than 2 options. First, ID documents. Secondly, a salary advice slip or proof of income. Then references from other businesses where they have accounts. Proof of residence, so in other words, your municipal bill or from a statement. References, credit history. Bank statements, it shouldn't be older than 3 months, and police clearance record. So these are all possibilities with question 1.1. Question 1.2. Use the table provided in your answer book to calculate the following. The correct closing balance of the debtors control account on 30 September 2021 indicate a change with a plus for an increase and a minus for a decrease or a 0 if there is no change. Remember that we get different types of reconciliation. One, where we look at the debtors control account must equal the debtors list. And then we have also the statement received from a supplier and we need to compare it to the creditor's ledger. Now this type of recon is where we need to look at the debtors control account and it should be equal to the debtors list. But take note at the answer booklet how it was given to you. They didn't ask you for the totals for the correct amount owed by the following debtors only. Information A. Balances on 30 September 2021 before taking into account the errors and omissions in information B. The debtors control account balance is 228,000 and an extract from the debtors list. So if you look at the answer booklet, all of these figures has been given to you. Before we now complete the rest of this question, we are going to look at each adjustment individually. So the following errors and omissions must be taken into account. An invoice for 1,750 issued to A bonds was recorded in the books of Zigzag Traders. If we look at what is happening here, from the journals, we need to post it to the ledger account, to their personal account, and from the journals, we have to post it to the control account. So you need to identify where the mistake occurred. So they specifically said the invoice issued was not recorded. So the mistake was right in the beginning. It was not recorded in the journals. This means we need to fix it in the individual's account and in the control account. An invoice means that they owe us more money. So on the debit side, we're going to have plus 1,750. Number 2, a direct deposit of 2,500 by E. Foley was correctly recorded in the journal but incorrectly posted to the account of E. Foges, another debtor, in the debtor's ledger. If we look at our checklist, It was correctly recorded in the journal, but it was incorrectly posted to the ledger account. This has nothing to do with the control account. It has to do with the individual. So what do we need to do now? We need to identify which account was incorrectly debited or credited. So how do I know? A direct deposit means that a payment was made by the debtor. This means that we have incorrectly credited E-Focus, another debtor, instead of E-Foley. So to correct this, we need to debit E-Focus so that the correct account can be credited to show that they owe us less money. If we look at the next one, the total of the debtors journal, 62,500, was incorrectly recorded as 65,200 in the debtors control account. The mistake happened in the control account. It was correctly recorded in the debtors journal, but it was incorrectly posted to the debtors control, which means it has nothing to do with the individual's account. And also take note, they didn't mention any debtor's name. This means that the debtors control account was incorrectly recorded as 65,200. It's supposed to be 62,500, so this was overstated. The difference is 2,700. Very important, it will have a negative effect on the balance. The next one, merchandise sold to Davis, 3,500 was treated as a return of goods and recorded in the debtor's allowance journal. So you need to understand, merchandise sold means that this person actually owes us more money. It should have been recorded in the debtor's journal. When we're selling goods on credit, it goes into the debtor's journal. But now it was incorrectly recorded in the journal, in the debtor's allowance journal, which means that we need to fix this in the individual's account as well as the control account. In my debtor's control, debtor's allowance, a return means the account was incorrectly credited with 3,500. To correct this, we need to debit it. But if we debit it only by 3,500, we're just taking out that amount that was incorrectly credited. We still need to show that merchandise was sold. This is why we need to times it by 2. So we actually need to say plus 7,000, which will have a positive effect on the balance. Number 5, 5,200 received from Declain, a debtor whose outstanding balance was written off 6 months ago, was recorded in the cash receipts journal as a receipt from a debtor. Remember that if your account is written off, if a debtor's account is written off as bad debts, it means that they're no longer a debtor. So when we recover that money, it should be shown as bad debts recovered and not from money received from a debtor. So what is happening here? In my journal, it was incorrectly recorded. It should be recorded as bad debts recovered. This means that we will need to fix it in the individual's account and in the control account. Now you would notice back on the answer booklet, Declain doesn't form part of the debtors list because he's no longer a debtor. What needs to happen is the debtor's control received from a debtor. We now need to debit that to make the correction so that the correct account, bad debts recovered, can be credited. This will have a positive effect on the balance. Merchandise returned by A bonds was recorded in the relevant journal as 250 instead of 700 and posted accordingly. So what happened here? It was recorded, but it was recorded incorrectly in the journal. This means that we will need to correct it in both the individual and in the control account. Merchandise returned means it was recorded on the credit side. It was supposed to be 700, so we've understated the credit side. To correct this, we need to add 450 to the credit side of the account, which means that this will have a negative effect on the balance. We have understated the amount. Now we need to add 450 to that so that it can reflect the correct amount. An EFT for 7,850 received from eFolly as part of payment of his account was entered correctly in the relevant journal, but no entries were made in the debtors ledger. So they're specifically telling you we've recorded it correctly in the journal. No entry was made to the debtors ledger, meaning to the individual's account. So it has nothing to do with the control account. In the individual's account, an EFT means a payment was made. They owe us less money. We are now going to take all the workings for T accounts that we've done to now complete the answer booklet. Remember what the instructions said you need to indicate plus, minus, or 0 for no change. So if we look at the first one, it was plus 1,750, the control account as well as the individual's account bonds. Number 2, we have to correct it in the list, which means no change, 0 in the debtors control account, and in the list we're going to have minus 2,500. The third one, we have to fix it in the control account when we needed to say minus 2,700. Number 4, the debtors control and the individual's account, we've recorded it incorrectly on the credit side, which means that we need to now correct it by adding it twice in the control account as well as the individual's account. Number 5, declaim. Remember, declaim is a debtor whose account is written off, so it does not appear in the list. It was supposed to be recorded as bad debts recovered. We need to make a correction in the control account. So in my control account, we're going to have plus 5,200. Number 6, debtors control bonds. Both, we need to fix it. The credit side was understated with 450, which means it will have a negative effect on the control account as well as the individual's account. Next one, in the individual's account, we needed to say minus 7,850. There were no change to the control account, so 0 for no change, minus 7,850 in the individual's account. Now we can add the total for the debtors control account. Do not forget to include the provisional balance that was given to you. For the debtors list, we're going to just add each individual's account. A total was not required. Question 1.3. Refer to information C. Explain 3 different problems highlighted by the debtors age analysis. Provide the name of a debtor and or the figures in each case. So you're going to see now, when we analyze this, the debtor's age analysis, that there would be more than one option with each different problem which you have identified. Now, when we look at the age analysis, we always look at, do the debtors exceed their credit limit? Do debtors comply with the credit terms? Do we allow debtors to buy on credit who are defaulting on their debt? These percentages were all given to you, but take note, if you were to calculate the percentages, if it was not given to you, you would take the total debt for that month, example, the current debt, divided by the total debt times 100. For 30 days, you would take the 30 days, which is outstanding, divided by the total debt times 100. And the same for 60 days and more than 90 days. So if we look at the first problem, they are not adhering to the credit terms. They are slow payers. Remember that the credit terms are 30 days. So anything outside of 30 days means that that is still outstanding. They are not adhering to that credit terms. So if we look at which individuals, Blom, remember you need to mention the name and quote the figures. 20,000 is outstanding for more than 30 days. We also have other debtors. If you look at 21% plus 7%, that falls outside of my credit terms, which means 28% is not complying with the credit terms. And then we also have OMAC. 4,000 is outstanding for more than 90 days. The next thing that we can look at, which debtors exceed their credit limit. If we look at debtor ZP, his credit limit is 22,000, but his outstanding balance is 29,000. So he's exceeding his credit limit by 7,000. Then we can look at which debtors is defaulting debtors, but we are actually still allowing them to buy on credit. If we look at OMAC, there's outstanding debt for over 90 days for 4,000, and he currently owns or owes 2,000. Then we've got Blom, which is another option. 60 days, his outstanding balance is 20,000, and his current balance is 18,000, which means we allowed him to purchase this month for 18,000. Then we've got other debtors. There's outstanding debt for 30,148 and 12,716 for more than 90 days. Yet currently we allowed debtors to purchase for 55,244. So make sure with this question that you identify 3 different problems. A mark was allocated to each one, and that you quote the name of a debtor and provide figures in each case. 1 mark was allocated to each one. So you had more than one option. Question 1.4. Refer to information D. Provide 2 points to support the internal auditor's concern that Susan's job description could lead to potential fraud. So if we look at information D, Susan, a member of the sales staff, is also responsible for collecting cash from customers who choose to pay in this way, receiving goods returned, and issuing credit notes to customers who return goods. The internal auditor is not happy with Susan's job description as he feels it has the potential for fraud, which could lead to a loss of cash and trading stock. So if we look at different options now, the first one, too many related functions performed by one person could compromise the efficiency and job not done well. Then there's lack of supervision that could lead to negligence. We could also say rolling of cash, theft, no authorization for returns, not applying returns policy effectively. There's no division of duties, temptation to engage in fraudulent transactions, manipulating sales or returns, creating false documents, mismanagement, poor record keeping, stock sheet of debtors. Then we can look at cash is easily stolen, not using electronic payments or credit cards or EFT. And the last thing that we can also look at is there's no continuity of task. Task may not get done or lag behind if Susan is on leave or absent because there's only one person that's doing all of this. Thank you very much. Next, we're going to look at question 2. Hope you have a wonderful day.